The final panel is Investments in FinTech. Our panel members are Alexey Telnov, Investment Director at iTech Capital, John Soberg, Advisor at 8VC, and Marissa Ros, the co-founder and CEO of H-Farm.
Okay.
So, we're missing the moderator.
Who's the?
You do that?
I'm gonna do. So the moderator
the
is sitting on a plane
Come
and
here.
didn't make it today. So we don't have a moderator. So we'll just have a discussion, I guess. I can start. So I'm John Soberg. I'm a advisor at 8VC. I also have a small fund that I do very early stage seed investments. I'm based in Silicon Valley, and I've done 60 investments, I think, around the world. Some everywhere from Asia to the U.S. to Europe, and about 50% of my companies are in FinTech. So I've done a little bit in this space. Marissa.
So, my name is Marissa Ros. I'm the founder and co-CEO of H-Farm. H-Farm is the largest platform in Europe for open innovation. We basically connect the international startup ecosystem with the large established corporates and company, traditional companies, or as I define, low-tech companies. And the part of our environment that make consistent the large comes from education. So we are investing a lot into education for the next generation, because the assumption when we started 12 years ago this project, it was two things. One is that technology is changing everything in all sectors, having an impact in our society, in our day life, and of course in our business and all business models. And the second assumption is that technology, it's effective once it's combined with the next generation. Let's say we have already a couple generations which is native inside the, let's say, digital age. It is where we are addressing. So after 12 years from an early incubator in 2005, today we gather together those students campus starting from 5 years old up to university, and then we do investment and we provide, let's say, innovation journey to those companies. So we are building an infrastructure. It's about $100 million. We invested over 25 million euro in seed startups. We have an active portfolio of about 90 startups. And we invested another 26 million to date, that we are raising now 30 more millions in acquisitions and structure of this ecosystem.
Okay, thanks. First of all, I'd like to thank all the audience, all the hosts for such a beautiful venue in Sofia here. So my name is Alex Telnov. I'm from iTech Capital. Actually, we started 6 years ago. This is our first fund. We have $100 million under management and 60 investors who definitely help our portfolio companies not only with money, with funds, but with recruiting, advice, corporate governance, whatever. Actually, we have 30% of investments in FinTech, and that's why we are here. Other companies that we invested are mainly Series A and further. We invested in local leaders, in online travel, in ticketing business. We mostly like B2C models because we can see the use case. We can understand where the service and product is painkiller for the audience or vitamin. And in terms of FinTech, this is a very huge industry, approximately $12 billion in 2016, and it has grown 5x times for the last 5 years. As I have already said, 12 billions and 800 deals across different segments. And now it is like 25% of all VC funding globally. So the industry started like 10 years ago with the rise of e-commerce services, software as a service with freelance, and mostly was concentrated on payments. Payments, peer-to-peer transfers, and so on. So I think I will try to start moderating this discussion with my colleagues, and it would be interesting to hear maybe why do personally you like FinTech, and why do you invest in FinTech?
Why? So, I mean, I guess a couple of things. FinTech, you always know where the money comes from, because you're dealing with money. So you don't have any questions about what the business models are. It's actually fairly straightforward, usually, how the business works. For me, though, personally, it's because I used to work in FinTech. I managed a large lending company for a few years. I worked in asset management before that. So I've actually worked in the industry before I started investing in it. And then I think if you think about financial services globally, and we've seen this over the past 5 or 10 years now, where it used to be that they were just absolutely controlled by the big banks and by large organizations, and we're seeing startups that are able to really make an impact. So these are huge, massive markets. Nobody has to question the size of the market. Nobody has to question how these companies can make money. The question is, can they execute and can they succeed? So it's interesting. It's getting more crowded, but it's still probably the biggest opportunity that's out there in terms of a market.
And why do you think it is difficult to invest in FinTech? Because I know you have few investments in FinTech.
I don't think it's difficult to invest in FinTech. I think FinTech, in my opinion, we are approaching as, let's say, vertical. We're approaching now. I think it's a very interesting industry because FinTech, it's about data. And money or data represent just a value. And we are entering now into a data age. So there is much more consciousness around the data. I think the disruption of FinTech started with blockchain. But the space, the players, the banks or the system, they didn't understand it. They also did not understand the first application, that Bitcoin was the first application of blockchain, and the banks didn't understand. So major mistakes were to say, hey, they were making a new currency. It was just an application. And probably still today, the banks are not fully aware that they are dead men walking, and their future in a very short time will be much different than how it was their life for over 30, 40 years. So FinTech is an extremely interesting space to invest and to watch, because we move from the interactions between the people, how the transfer, we have thousands of interesting applications in how to transfer the value. And also it is exactly the relationship we have with the value. So that's, just imagine how the bank in the future will be, just to understand this space, how big it is. I don't have numbers, probably you two guys has a better depth information this one, but I think we all agree that where is money around makes sense to work, to invest, or to start companies.
I'd like to ask just quickly, could you raise your hand if you're involved in any FinTech startups in the audience? Anyone involved in blockchain or in? Okay. Any in lending?
Peter.
Got it. Anyone else in maybe not in startups, but just looking at FinTech in some way? Okay. Since we don't have a moderator, one thing we can do here is we can actually try to talk about things that you are really most interested in instead of just talking about things. Does anyone have any questions that you'd like to have us answer? Yes. Shout, I guess, yeah.
I think it needs a microphone.
I think it's a great question. So the question was, is there, I think, I couldn't quite hear you, but the question was, as more and more things get integrated, is there a genuine concern for security, or is it, and in some ways, does that actually prevent some of the integration? I guess I've got a couple of different answers for you. One is, as I've been investing in FinTech for now going on 10 years, and it's now become kind of funny to me. 10 years ago, you couldn't go to a conference and talk about FinTech. Now you can go to a conference in Silicon Valley, and it's just on lending, and you'll see 5,000 people will show up. And you could do one on payments, and there's another 5,000 people. So it's clearly really gotten to be big around the world. But one of the things I was going to say is that there's a huge trend now where security is one of the biggest areas of investment that you see with FinTech investors. And lots of different types of security in terms of how they're integrating systems, how they're managing on the consumer side, and then some of the back-end pieces as well. So I would tell you two things. One is I think there's definitely a lot of attention being paid to security and how that impacts as companies are putting more and more information in the cloud and online. And then secondly, though, I would tell you that there's an awful lot of infrastructure that's out there that's not particularly secure. So as an investor, it's one of the more interesting areas to be looking at because you've got old infrastructure that's not necessarily built to be working with cloud type of services, and at some level you need to be able to solve that problem.
Yep, and I would also to add several things. There are several issues in investing in FinTech and building FinTech companies. As you have already mentioned, this is security because every investor, every company should perform very specific technical due diligence because FinTech companies do deal with personal data, with different legislations, with very heavy backend. And in this case, they should be compliant with anti-money laundering, taxation, KYC procedures, and so on and so forth. This is the first issue. The second one, that mostly half of the startups have third-party partners. This could be banks, this could be exchanges, this could be brokerage companies or so ever. And definitely these third-party companies do influence the business model of a startup because they have their margins, they raise their commissions, and you definitely should take a closer look what would be your net result of financing activity. Moreover, it is a very interesting space because we're now in the third wave of transmitting value because, as my colleagues have already said, we started with transferring information via the net. It's like messengers, emails, and so on. Then we transferred video and images via the net, and Skype is the most interesting example here. And now we're talking about blockchain, cryptocurrencies, public, private blockchains, which could help us transfer the value via the net. And that's why FinTech is a promising industry still. Still it is 10 or 15 years, so we take a close look at it.
I have a question for the two of you.
What's that?
I have a question for the two of you. It's just kind of a curiosity. It's about regulatory, the startup and the issues and how you deal. This is something that I've always been in because in my past we always say investing with where is regulatory, it's in some fashion, like say, it's a headache because if you push the boundaries, you can have risk that are regulatory. But then I met some people that they say it's investing where there is a stronger regulatory is always very interesting, because if you can find a way, you get a door, you bypass and you find an answer, you can have a solid answer. So it was something that inspired, but I don't know how the startup and the investment you did it, how this is a limitation or it is just like making the next social app.
So I've invested in both. I've invested in places with strong regulatory environments and in places without. I think, so I can give you a couple of examples. I'm one of the first investors in a company in Germany called FinTech that does online lending. And they started in Germany, and then they couldn't actually get their license to lend in Germany, so their first country was actually Poland. And they had and now they've gone to Mexico and Russia and a bunch of countries around the world. But they have a very specific template for what they look for when they expand to a new market. And they look for they do want a well-defined regulatory environment, not necessarily as tough as the United States, for example, which is beyond well-defined because we have regulatory environments in each state plus in the federal government. So there's 51 different regulatory bodies that you have to deal with in the United States. But FinTech would look at a country and they would say, okay, is there a well-defined regulatory environment? Do we understand what we need to get our licensing? And two, are there competitors that are already working in this industry? If those two things were true, then they were able to go. If one or the other wasn't, then usually that was a signal that the regulatory was too unstable or the market wasn't well enough developed for them to actually execute. So on the flip side, though, I would say that in the United States, when I look at an investment, I look very carefully at whether somebody understands the regulatory environment, because it will kill companies if they don't. On the flip side, once you get licensed and once you get further, it ends up being a competitive advantage. So it's one of the things that makes FinTech different, makes it more unique, and gives it some real opportunity, is companies that understand how to work within the regulatory frameworks actually end up having barriers to entry that make it more difficult for other competitors.
Yeah, and we typically try not to invest in the companies which could not obtain license or lose license, or which legislation is in the gray zone. That's why we definitely do not like such mature industries like payments, like point of sales, like e-wallets, and other industries with tons of billions invested already. I think a very huge chance and very interesting segments in crowd investing, equity financing, in asset management, everything connected with retail investing, because we see that fixed income instruments, deposits, and etc. The instruments which could be obtained on public markets doesn't provide individuals or family offices with interesting return rates. That's why with implementing of such trends as mobility, cloud, artificial intelligence, we are looking closely what will happen with investing industry. It could be whatever, robo-advisory or the industries that I have mentioned.
All right, we got a little bit of time left. Is there another question we can take? Here? No. Anyone have a good story?
Joke. Hi. My name is Denis, representing TBI Bank and Finstar. Actually, I have two questions. First of all, FinTech is quite broad definition, so just very quickly from your side, what is trending now, so as funds, which companies you see on the market to come to for investments. And the second question in following discussion regarding regulatory risk, do you believe that such concept like BAP, bank as a platform, or BAS, bank as a service, when you're renting your banking license, can give FinTech chance to develop themselves in terms of just collaboration between FinTech and banking industry? Do you have such examples in your practice?
I didn't quite catch the first part of the question. The second part, so the banking as a service, I think, so FinTech is very broad. I don't want to, we're going to run out of time here. But it's now becoming a lot more verticalized. If you look at insurance, if you look at banking, if you look at payments, if you look at lending, they're segmenting themselves in terms of the way companies are going after them. There's some really good examples, though, of platforms that have come up in the past few years. There's always been one in the United States for a long time called Webbank that used its license and allowed startups to use it in order to get their licenses in different states around the U.S. It's we always say it's like giving miners their tools as opposed to trying to invest in the gold. So that's been very, very successful. There's a company in Germany called Solaris Bank that launched a couple years ago that's actually done quite well. And there's a couple new platforms in the insurance space that are also taking the same approach to that industry. I think it's actually a great idea, and I think that there's going to be some great success stories there.
Yeah, in terms of segments and industries, I think the trending models are actually based on not transaction commission based fees, but on subscription based businesses. It is more attractive for investors. Now it could be every kind of segment, starting from payments and going further to actually management of financial assets. I do personally like the idea of everything connected, of course, with blockchain, with attracting capital and controlling capital inside the projects using blockchain, actually. And answering your second question, I think that it could be a nice entry point for businesses when you obtain a banking license or another kind of license, but it's also a threat because every investor performs kind of due diligence, and it could be a risk factor if your bank license provider should somehow then disappear without the license. And I think the banking industry versus FinTech, it is rather competitive space, because most of the banks used to implement all the disruptions that FinTech companies made. It could be a nice front end, it could be a nice business model and business approach, but such players as exchanges, brokerage companies, insurance companies, they lack such kind of developments, and this is a huge opportunity for VCs and for companies for now.
All right. I see we're out of time. Thank you for your time and for listening.
Thank you.
Okay. Thanks.